Yes, good morning, everyone. Okay, so in our last class, we discussed about opportunity cost, right? So opportunity cost is nothing but the value of sacrifice made and the usual definition of opportunity cost. Benefit forgone. Please remember, it is not like a normal cost definition. Say, for suppose if it is something like some other cost, you are going to explain like it is the cost incurred. But here, opportunity cost is not the cost, right? It is the benefit or profit forgone, contribution forgone, right? Okay. So it is the benefit forgone from the next best alternative because of selecting a specific alternative or because of taking a specific decision. As you have taken the decision, you are losing the opportunity of earning the benefit from the next best alternative. Is it clear? This is what opportunity cost is, right? Okay, good. Next, imputed cost. Imputed cost. Define imputed cost. Okay. Okay. Please tell me how you are going to define imputed cost. Sir, after writing imputed cost, you define imputed cost. These are notional these are notional cost which do not involve any any physical flow of currency. Physical flow of currency. Or if you want me to write as physical outflow, right? Imputed cost. So physical outflow of currency. What are the best examples for imputed cost? Best examples of imputed cost. The main intention of class is some part. You are going to say something, I'm going to cut, we are going to have a discussion. A majority of the students' focus is only to write saying something. Please try to define the entire line again. Tell me, imputed cost means complete line. Nothing. So, which do not involve any physical flow of currency. Best examples. I have two examples. One is interest on own capital, rent on own building. By the way, nothing but opportunity cost only. Opportunity cost only. When I am asking you imputed cost, you have to say these are the expenses incurred, I mean, which do not have involve any physical outflow of currency. Now coming to the first one, interest on own capital. Interest on own capital. When you want to start up a business, you need capital, right? And that capital either you can raise externally or you can manage with internal sources, right? right? If you have some accumulated profits, if you have some reserves, if you are investing accumulated profits again into the same business, you are reinvesting in the same business. In such a case, for that capital, for that capital, do you need to pay any interest to outsiders? Are you going to incur any cost for that capital? I mean, capital in the sense reserves or accumulated profits which you are reinvesting into the same business. No, no. We no at the end of the year or at the end of the month, no need of paying any interest or no need of incurring any cost for that amount because it is our own amount, right? Own capital means, right? But being decision making students, being costing and financial management students, you have to say, even though there is no direct cost involved, but if you are going to invest this amount somewhere else, you can earn some return of some 10%. You are losing that 10%. So interest on own capital means maybe it is not incurred personally, but it involves some opportunity cost. It involves some opportunity cost. So the same amount if you invested elsewhere, you can earn some 10% or 12%, which you are missing by investing in your own business, right? Clear? Second one, rent on own building. Earlier, this building you let out to some tenant and you are earning some rental income of some 1 lakh rupee. Let us assume. Now, in order to start your own business, you made the tenant to vacate the building and you occupied, you started your own business, right? Am I correct or not? Now, in order to run your own consultancy, having this many number of receipts, earning this much amount of profit, you are losing the opportunity of earning that rental income what you used to get earlier, right? So that rent on own building, interest on own capital, these are imputed cost. These are imputed cost. Here, even though I am saying it as cost, there is no physical outflow of currency. You cannot see any outflow of currency and you are not going to pass any entries for this, right? Right? This is only for the sake of decision making while you are evaluating. I'm going to consider in this way, stating that this is what I'm going to earn. It is because of selecting this alternative, I'm losing that rental income. Clear, clear? Right, good. Any doubts? Any doubts? Completed. Can I proceed? After imputed cost, differential cost, differential cost. Training something, you have to write it. Just like a running notes, you have to write. You're in CMA final. Yeah, right. Difference means change, right? Change can be increase or decrease, right? Okay. How this increase or decrease is related to our costing subject? Why you are using this term differential cost in our subject, in our costing subject or financial management subject, right? So why we are using, why you have that increase or a decrease in cost? See, when I'm saying some increase in cost means you are comparing with some alternative to other alternative or some period to some other period, then only you can identify that change increase or decrease. If you are saying material cost increased by 50,000, so you have compared with some other alternative where you have some 1 lakh rupee, let us assume. Now if it is 1 lakh 50,000, now you are saying there is an increase of 50,000 rupees. Without comparison, never you are going to get that increase or decrease, right? Clear? Right. Now in our costing, when you have that possibility of increase or decrease in cost, increase or decrease in cost, when you have that possibility, It is the is the change in total cost is the change in total cost due to change in production volume due to change in production volume, change in decision, uh, change in decision, etc. Now, I told you difference means a change, right? Difference means change. Again, change can be increase or change can be decrease. Increase in cost, decrease in cost. Increase in cost, decrease in cost. Increase in cost, we'll call it as incremental cost. So especially in decision making, we are going to use this term incremental cost, right? Right? So we have a chapter called joint products and byproducts, right? Whether the product has to be sold at split off point or sold at further process. In such a case, incremental sales if you go for further processing minus incremental cost if you go for further processing, nothing but you will subtract only further processing cost, right? Resulting you will get incremental profit, right? There you are making a decision whether the product is to be sold at split off or after further processing. So it is a decision, right? There only you are using the term called incremental. If I am going to ask you calculate profit at split off, calculate profit after further processing is an observation, it's not a decision. In case of observation, if you want at split off, prepare a statement for profit statement for split off. If you want to find out profit after further processing, prepare a profit statement for after further processing. Is it clear? Right? But when I am asking you to make a decision, I am asking you, is it better to sell at split off or going for further processing? Now I am asking you a decision. In such a case, I am going to use this incremental, right? Okay. So if you have increase in cost, incremental cost, if you have decrease in cost, then actually the term is decremental. The term is a decremental cost, but remember, never we are going to see this term called decremental in our books, because instead of decremental, they will use savings in cost, or they will say reduction in cost. Savings in cost or reduction in cost. Here, now please see 2025, 2026. As compared to 2025 or 2026, production increased by, that is assumes like some 20%. Earlier, total cost is 1 crore 20. Now in 2026, it is 1 crore 3 lakhs. 1 crore 3 lakhs. Now I can clearly see there is an increase of, no, the total cost is, give me the number. There is an increase of 30 lakh rupee. And this 30 lakh rupee, for the sake of our discussion, I'm going to call it as incremental cost. Incremental cost. Is it clear? Right. Now this is the language. 30 lakhs increase in cost. We'll call it as incremental cost. Now on the other side, you purchased a machine in the year 2024. Purchase machinery. 2026, after using for 2 years, you want to replace old machinery. I'm not saying about anything like original cost, depreciation, what is its WDV, what is the cost of new machine. I'm not saying anything. If you want to replace your existing machinery with a new machinery, so normally you will have some criteria for replacement, right? So maybe uh, technologically your old machine got outdated, obsolete, or new machine has better productivity features, can produce more units as compared to the old machine. Maybe you have your own reasons you want to replace your existing machinery with a new machinery. Is it clear? Right. Now, my point is, along with productivity, sometimes operating expenses may reduce for the new machinery as compared to old machinery. For old machinery, operating expenses at 50,000. You replace with the new machinery. For new machinery, operating expenses is very less. It is only 1,80,000 rupees. 1,80,000 rupees. Now, can I say it's because of this decision of replacement, your operating expenses reduced from 3,50,000 to 1,80,000, right? So, how much reduction in expenses? You have a reduction in expenses to the extent of 1,70,000. Now, this 1,70,000 is decremental cost, or I'm going to say reduction in expenses or savings in expenses. And you are frequently using this term like savings in expenses, that is the reason you cannot see that decremental cost. Is it clear? So savings in expenses is equal to 1,70,000. Above we have two examples. In one example, you identify some increase in cost because of increase in production volume. On the other side, because of replacing existing machine with a new machine, you have reduction in maintenance expenses to the extent of 1,70,000. Whether it is the reduction in expenses or increase in expenses because of change in production volume or because of a decision, replacement decision. Am I correct or not? Say for suppose if advertisement expenses increase from 5 lakhs to 7 lakhs, you have an incremental cost of, you want to go for, you want to uh, market your product on a wider range, so you want to increase your advertisement expenses. That is the reason. This is the decision, right? This is the decision, right? So as a result, your advertisement expenses increase from 5 lakhs to 7 lakhs, increase in expense to the extent of 2 lakhs. Now this 2 lakhs, my focus on this 2 lakhs, I'm going to use this term called incremental cost, incremental advertisement expenses. Incremental advertisement expenses. Is it clear? Any doubts? Right? Can I proceed? Yes, next, Define marginal cost. Marginal cost. Sir, marginal cost. Huh? See, I'm not asking marginal costing. I'm asking only marginal cost. Marginal means additional, right? Right? So it is the cost incurred for producing additional 1 unit of is the cost incurred for producing additional 1 unit of output. Either you can use additional at the beginning or at the end. If you are starting like it is the additional cost incurred for producing, then you have to say 1 unit of output. Don't say additional and additional. Is it clear? It is the cost incurred for producing additional 1 unit of output, or it is the additional cost incurred for producing 1 unit of output. Clear? Right. Now, this is the definition. And remember, always we are going to make a decision with regard to pricing or with regard to accepting an export order or overseas order, whatever it may be. So there you are trying to calculate incremental cost for 1 unit. Incremental cost for producing 1 unit you are trying to calculate, right? That incremental cost is nothing but marginal cost. So you are trying to find out the additional cost incurred for producing 1 unit of output, which is nothing but marginal cost. Is it clear? So this is very important. What are the items to be considered for decision making? What are the items to be ignored for decision making? You should be very clear when you are calculating that marginal cost. Clear? Okay. Before going for this marginal cost analysis, let us start. Let us start the explanation with the help of an example. Sir, I am going to give you the present status of a manufacturing firm. Present status of a manufacturing firm. Please see. Present. Our manufacturing firm name is XYZ Limited. XYZ XYZ Limited, present it is producing 1 lakh units. How many units? Here. And present its selling price per unit. Present means the actuals. Already it is happening, right? Selling price per unit is 25 rupees per unit. How much? 25 rupees per unit. Now, under the present scenario only, I am going to give you the 1 lakh units or 1 lakh markers, whatever it may be. I am going to give you cost structure. Cost structure for 1 unit. Material 10 rupees. Above 5. Variable overhead 3. Overhead 2. Put together total cost 20 rupees. Total cost 20 rupees. This is my existing cost structure and this is my existing production activity. This is my existing selling price. Is it clear? This is what I am producing within my facilities, building facilities, machine, workers and everything. These are the number of units I am producing and selling. This is my selling price. This is my cost structure. Is it clear? Okay. Now, I got a proposal. I got a proposal from a customer, overseas customer. Means you need to export, right? And that export order for 5,000 units, and the person who wants to export this 5,000 units is your friend. So obviously he's going to ask you the discount, right? Right? Okay. Now my question is, what is the maximum discount that can be given to your friend? Here, please observe the language. I'm using the word maximum discount. If the discount is maximum, can I say price is minimum? Yes, it is the minimum price you can quote for your customer. Means you are giving the maximum discount. Here, what is the minimum price that can be quoted to your friend? Maybe the question framed in two different ways, but both are same, right? And discount is maximum, obviously price will be minimum, right? Okay. Now let us discuss. So this is our existing cost structure, existing selling price, existing production quantity. After this 1 lakh units, now you got a special order of 5,000 units. Means if you decides to produce, if you decides to accept the order, 1 lakh plus 5, you need to produce 1 lakh 5,000 units. Clear? Okay. Now my point is, what is the maximum discount that can be given to your friend? 2 rupees, 5 rupees. What is that 5 rupees, sir? Profit. Sir, 3 rupees, sir. How you got that 3 rupees, sir? Sir, variable overhead, sir, you tell me the answer, right? Variable will, you know. So you have to explain why you are taking that stand, why you are ignoring this number. You have to explain. What can be your solution? Yeah, continue. 7 rupees. Why? I'm asking the reason. You told me 7. Now I'm asking you why. Explain. Might have some old notes. There you might have this 5 rupees plus 2 rupees, 7 rupees, right? Wrong. So can you tell me the price then? 2 rupees is to, you are my customer, going to say my selling price is 20. From here, discount is to be calculated. You are saying 2. So 25 minus 2, 23. Still anyone? Here it's okay. It's the same 2 rupees for 5,000. The wrong step. Anyone else? See, when you start negotiating, you will say to your friend, my selling price is 25. Remember, here we are making only financial evaluation. For reducing each and every number, there should be some logic and some analysis, right? Here, when I'm using the term maximum discount, that is the reason costing coming into picture. If it is a normal discount, okay, for everyone it is 25. I will give you for 24. No costing is required for that 1 rupee reduction. You will ask me further. I will give you 3 rupees discount. Now it is 22 rupees. You will ask me further. I will give you complete profit as discount. Now 20 rupees. You are asking me further. 20 rupees is my cost. You are asking me further discount. Is it possible? First instant, you can give entire profit as discount because you are my childhood friend. I don't want to earn any profit as it is our first order. I'm going to give you the complete profit as discount, 20 rupees. Still you are asking for discount. Now here, being a cost accounting student, you have to think and you have to say, as your friend is saying, in this 20 rupees, you have variable cost 18 rupees. That is material, labor, VOH. Variable cost is 18 rupees. Fixed cost 2 rupees. Fixed cost in total remains same. Fixed cost per unit will change, right? Now fixed cost, even though it is calculated on per unit basis, always try to analyze fixed cost only in terms of total. And fixed cost is to be calculated either at existing capacity or at normally whatever the capacity we are using. At that capacity, you need to calculate our fixed cost. Means if you want to calculate total fixed cost, please calculate at your present level of 1 lakh units. Means 1 lakh units into 2 lakh rupees. 2 lakh rupees. Now I will say this 2 lakhs will remain the same. Whether I am producing 1 lakh units or 1 lakh plus after accepting the order 5,000, your total may increase to 1 lakh 5,000 units. But still my fixed cost will remain same because nothing is specified in the question stating that if you accept your friend's order, there will be some increase in fixed cost to the extent of 10,000, 20,000. Did they specify anything in the question? If nothing is specified, can I say the same fixed cost will continue after accepting the order? If the same amount of fixed cost is continuing before accepting the order and after accepting the order, as per our discussion, can I say fixed cost is common in nature, it is irrelevant for decision making. It is irrelevant for decision making, right? What is relevant for decision making? Only the additional cost which is going to incur from your pocket for every 1 unit of output. If you want to produce additional 1 unit of output, whatever the outflow you are going to have from your pocket is the additional cost or marginal cost. In this problem, that marginal cost is only variable cost because fixed cost, there is no increase. There is no increase specified in the question. Is it clear? Clear? So, in this scenario, I want to calculate marginal cost is equal to variable cost only. Marginal cost is equal to variable cost only. So, my answer is 18. My answer is 18. And this is the minimum price. Sir, what is the maximum discount, sir? 18 is the minimum price. Do you agree? Yes. Beyond 18, can you decrease? Can you give any further discount? So this is the minimum price I can give. If you ask me what is the maximum discount, actually what is the selling price for outsiders? I am giving you for means maximum discount is beyond that I cannot give. Is it clear? This is the situation. I mean, this is case 1. Based on this information, this is my marginal cost. Clear? Now for the same question, I'm going to give you some additional information. Case 2. Sir, our present stage, we are producing 1 lakh units, right? One lakh units, right? Same cost structure, sir. 10, 5, 3, 2, 5 rupees profit, selling price 25, everything same. Now, whatever the existing building, existing facilities, machinery, labor force, everything is just sufficient only to meet my 1 lakh units. Let us assume only to meet my 1 lakh units. Exist and produce only. Now, this is the proposal export order. How many units? Export order 1 lakh 5,000. Export order 5,000 units. You know the difference between incremental and total. Clearly, I specified present and proposal. Proposal is not 1 lakh 5. 1 lakh already you are producing. Clear? So 5,000 units is our proposal. Export order of 5,000 units. Now, in order to produce this 5,000 units, as my existing facilities are sufficient only to produce 1 lakh units, for this 5,000 units, I am taking some additional space for rent is equal to 25,000 rupees. 25,000 rupees. Now, in such a case, it is very clear, if you accept that order, you will incur this 25,000 rupees. If you reject that order, I am not going to incur this 25,000 rupees. Am I correct or not? Normally, rent is fixed cost, right? Am I correct or not? Rent is, but here, this fixed cost. Earlier, I told you to ignore fixed cost for decision making. But here, this fixed cost is specific fixed cost. This fixed cost is specific fixed cost specifically incurred for your decision making. So this fixed cost is relevant for decision making. Relevant for decision making. This fixed cost is relevant for decision making. Now, under this scenario, if I'm going to ask you, so this is situation 2, right? Marginal cost or additional cost is equal to, one is variable cost plus specific fixed cost. Specific fixed cost. Here. Now marginal cost is equal to, what is our variable cost, sir? Specific fixed cost. But remember, 25,000 is for the entire production of export order, 5,000 units. So as 18 is for 1 unit, let us convert, this is also for 1 unit. 25,000 divided by 5,000 units. Can I say 5? So 18 plus 5, which is equal to 23. This is my additional cost. Always people will think marginal cost means variable cost. 99% is it is same. Marginal cost equal to variable cost. But sometimes you will have fixed cost and specific, right? So that is to be added to your variable cost to arrive at additional cost, marginal cost. Clear? So situation 1, it is marginal cost is equal to only variable cost. Situation 2, variable cost plus specific fixed cost. Here 23. Now if you ask me what is the maximum discount means, 25 minus 23. Here it's not because of cost, as we are incurring some specific fixed cost, our cost incurred from 18 to 23, increased from 18 to 23. Now here the maximum discount is only 2 rupees is possible. Clear? Right. Now situation 3. Again with the same information, sir. Present we are producing 1 lakh units, same cost structure, 10,532, selling price 25 of as running notes. I am explaining some points. These points are very useful for your relevant costing chapter. Relevant costing chapter. Remember, costing means decision making, marginal costing, not standard costing, not process costing, not joint products by products. Always pricing, decisions. Is it clear? Not cost sheet pro forma or else something else. Term means capital budgeting, costing means marginal costing. Marginal costing is the phase of costing. And I'm explaining the points. So people don't know the difference between fixed cost and specific fixed cost. Here, so please try to focus. Try to focus. Again, I'm giving you different scenario. I'm giving you third scenario. Present, same 1 lakh units, cost structure. Repeat 10, 5, 3, 2, selling price is 25. Here, now proposal scenario. Present, everything is same. Normally, factory works for 8 hours per day, right? 5 days in a week, right? Right? Say some 5 days in a week and 4 weeks per month, so on, so on, so on. We expected more demand from the market, and we recruited so many number of workers as per our requirement, and actually the demand is slightly less. As a result, we are using our workers only 6 hours per day. Sir, so this is the plan what we have actually, but as because of less demand in the market, we are making them to work only 6 hours per day. Sir, you promised me to provide work for 8 hours per day, and even though you are unable to provide me work for 8 hours per day, but still you need to pay wages for 8 hours, right? This is as per the commitment, as per the agreement, right? Okay. Now what factory is doing? They are making them to work for 6 hours per day, balance 2 hours they are transferring their workers. They are making them to work in other department. That other department, they need labor force. So we are supporting with our workers. We are transferring our workers to the other department in order to support their production. As a result, that other department people, they are going to give something in return to us, right? Right? Like some 20,000 rupees. So 20,000 rupees is the contribution earned by our workers. Now tell me, this 20,000 is given directly to workers or to the department? department, because we are paying wages for the 8 hours, right? Am I correct or not? When I am paying wages fully for 8 hours and making you to work within those 8 hours in the other department, so that contribution is to be taken by the department, right? Okay. Now this is what we are earning right now in our present situation. Now you got this export order. You got this export order. If you want to accept that order and start the production, you have to withdraw your workers from the other department because you have sufficient work now, right? When you withdraw the workers from the other department and making them to work on this 5,000 units export order, now whatever the contribution you are earning 20,000 rupees, now you are not going to get that 20,000 rupees, you are going to lose the 20,000 rupees, right? Am I correct or not? Because they have to work on export order. Now this contribution earned 20,000 rupees. After accepting the order, you are going to lose this. Clear? Now your friend is asking you to tell me the price, the minimum price to be quoted or the maximum discount. Always the price is nothing but the outflow or the cost what I am incurring, the additional cost what I am incurring is going to be the price for you. So in this scenario, I am going to calculate marginal cost is equal to, I'm going to explain to my friend stating that for you, I'm incurring variable cost. So obviously it is marginal, right? Are you incurring any specific fixed cost? Specific fixed cost? That is in case 2, sir. This is altogether a different, right? This third scenario. Here I am not incurring any specific fixed cost, but here I am incurring opportunity cost, right? So that opportunity cost is nothing but contribution lost. Clear? Why I'm adding to my friend's marginal costing equation? Because it's because of you I'm losing that contribution. If I'm not going to accept the order, I will get the 20,000 rupees again, right? So variable cost is 18, contribution lost is 20,000 rupees. For how many units? I'm losing this 20,000 rupees for producing 5,000 units. So 4. Put together 22. 22. Here. Now finally, if you ask me what is marginal cost means, I will say marginal cost is equal to, one is variable cost plus specific cost plus opportunity cost if any. Opportunity cost if any. So this is the final equation. Say for suppose if you don't have any specific fixed cost, sir please look at the screen. If you don't have any specific fixed cost, if you don't have any opportunity cost, put 0 and 0, you will come under situation 1. If you don't have any opportunity cost, put 0 in third case and then you will get case 2. If you put specific fixed cost 0, case 3. Is it clear? So this is the equation. So you know one thing, this is nothing but our transfer price, minimum TP. Minimum TP is equal to variable cost plus specific fixed cost plus opportunity cost if any, right? Their minimum TP is from transfer perspective. So you are trying to calculate whatever the additional cost you are incurring for producing and transferring to the other division. You are calculating in the same way, right? Same equation, right? Same equation. Is it clear? Right? Can continue next slide.